In this video, we're going to talk about how to get a mortgage and the role that credit plays in that process. So first, let's talk about credit. Everybody's always concerned about what kind of credit score you need to have to purchase a home. The reality is there are lots of options. Right now, there are some lenders that will still go down to a 580 with a minimum down payment of 3.5%. Now listen, if you're watching this video during this pandemic, when this video was recorded, then it's very important that you talk to your lender about what specific programs they have available and what credit scores they're able to go down to. Because right now, every lender is very different. So, in a normal scenario, 580 is the bare bone minimum credit score that you can have in order to get qualified. However, with a 620 or even a 640, your options are going to open up dramatically. What do I mean by that? You're going to have access to lower interest rates and lower fees the closer that we can get to that base credit score of 620 or preferably 640. Well, what goes into a credit score? How can you boost your credit? This is the main thing that most people come to me and have questions about, or they're afraid to talk about because they don't know how to get started. So the first thing that you have to do is just pull a copy of your credit report. Now listen, there are some online sites like Credit Karma that allow for pulling a free credit report, but I'll tell you this, the information is not accurate, okay? The reason that Credit Karma is free is because they use old formulas. They don't use all the current formulas that are available right now. So listen, I do tell my clients, hey, Credit Karma's not a big deal. You can use it in order to have a good idea of like what's reporting on your credit, or if there are, if there's anything new that pops up. But as far as a credit score goes, I would not use that to figure out, hey, what is my credit score? Now listen, most lenders like me, we use the FICO 5. Now the FICO 5 and the FICO 8 are credit score formulas. They've been in use for the last 10 years. Most lenders, most national lenders, are going to use one of those two credit scores. And that's why if you get your credit pulled by one lender one day and another lender the next, more often than not, that mortgage lender, if they're doing a mortgage credit report, is going to pull the exact same score. So it's not that really big of a deal, but we all use typically the same credit formulas, and that way each lender is looking at the same type of report. So what do we look at when we pull a credit report? Well, yes, we do look at your credit score. I mean, that's one of the things that's going to determine what type of loan we can get you qualified for. But we also go in to see what types of credit you actually have. Do you have installment loans? Do you have credit card debt? Do you have student loan debt? Do you have mortgage debt? Are there collection accounts, medical collections, or charge-offs? We're gonna look at each one of those and see, well, what happened here? The reason that a lot of folks are afraid of what to do or how to get started regarding credit is just because they haven't had somebody just look at their credit and say, here's what you should change and here's what you don't have to change. Now listen, every lender's different, okay? You want to work with a lender that is going to instruct you and give you advice on what to do after they pull your credit if they aren't able to get you qualified. There are a lot of banks out there that will just pull your credit and then you won't hear from them, and then 3 or 4 or 5 days later you get a letter in the mail saying, hey, we pulled your credit, unfortunately you don't qualify. Listen, I look at those credit reports all day long, and the one thing that you want to do if you're concerned about your credit is just make sure that you have a good referral to a local lender that will help you and walk you through what you need to do regarding your credit. But let's say that you have pulled your own credit report and you're looking at it. Here's what we want to see. No late payments in at least the last 12 months, preferably the last 24 months. Now listen, a late payment by our definition is something past due 30 days. So if your payment is due on May 1st and you make it on May 15th or May 16th and you pay the late fee, that's not considered late as far as credit goes. We only care if it goes past 30 days. So you want to make sure that you haven't had late payments in at least the last 12 months. You want to make sure that your credit card debt is at a low usage ratio. What I mean by that is if you have a credit card and it has a $100 limit, you want to keep the balance at about $30. Listen, that's hard to do sometimes, but if you know that you're getting ready to apply for a mortgage, what I would suggest is just paying down that credit card before applying for a mortgage, and then your credit score will be boosted up. So that's a quick tip that I give a lot of my clients after I pull their credit, but don't be afraid to have a lender pull your credit if you know that they're going to be willing to talk you through the different options. I hope you enjoyed this video and learned more about the role that credit plays in getting a mortgage. Remember, this is just one of the factors that goes into getting a mortgage. We have credit, income, and assets. So be sure to watch the other videos in this series to continue learning how to get a mortgage.